the last crisis, basically in 2008, the subprime crisis, you had a big, not a big shift, but I would say a big popularization of private markets. People tend to invest more and more in private markets, even family office, which now tend to have over 60% of their AUMs on private markets, rather than 15 years ago that wouldn't be the case. So you have a big shift towards private markets. The causes, I think, I'm not going to go into details because there are a lot of causes for sure, but it's basically the returns. I think public markets cannot deliver the returns as private market is delivering. Like if you can see, like for example, venture capital in Israel, the median return of venture capital in Israel is for 13% IRR. So basically, it's a lot about performance, and of course also about the late interest environment we're having right now. Corporate bonds paying very, very little money. So yeah, this is some of the causes, but I could also spend more time on this, but I think
that's very clear. If someone studies the market at the moment, they'll see what the returns are on bonds. They'll see the volatility that the stock market has, and historically, over the last decade, private markets have been doing well. So it's purely performance based. Now, in the future, we might see again a shift, either more to private markets or more to public markets, based on what's happening now, based on the geopolitical change that is expected, based on the climate change that I mentioned before, based on technology and how people may use it going forward. So I expect there's going to be a shift one way or another. Nobody knows.
What's important to mention also is that private markets is very different to public markets in the sense that most private markets are illiquid assets. So people it's also an education for a wealth manager to basically switch from public markets to private markets. It's also an education to have, because instead of having your money into buying some shares of a company and selling whenever you want, sometimes, for example, with venture capital funds or PE funds or even real estate funds, you have money basically which you have capital which is basically blocked for 3, 5 or even 10 or 12 years over a period of a fund. So it's important to mention that private markets tend to be illiquid and in contrast with